Welcome to Money Matters TV. I'm Kelly Stewart. I'll be your host today, and I'm joined by banking expert and CEO of New Finance, John Mason.
Kelly?
Hi, John. It's good to see you again.
Good to see you again.
How are you doing?
I'm doing well, thank you. And you?
I'm doing well. What does the banking world bring us today? Because I know you and I could probably talk about, 100, 200 different items and slice and dice it many ways for our viewers. But I think today we're going to probably focus on jobs, unemployment,
well, that's a good place to
economic
start.
growth. Let's start there.
It's a good place to start.
Awesome.
We can start out. Last Friday, the Labor Department announced that 266,000 workers were put into new jobs, and which surprised a lot of experts and the like. The unemployment rate dropped to 3.5%, which is a 50-year low, which means that you've got to go back to the latter part of the 60s to get that low an unemployment rate.
Right.
But then you go to the other side of things, and that you see that economic growth, the real GDP is only growing by 2.1% year over year. And you get some other factors going on there that say, what's going on here? The jobs market seems to be so good, and yet the economy seems to be just chugging along without a lot of enthusiasm.
So, if we were going to break that down, then what surprised people about the jobs growth?
Well, if you don't have strong economic growth, you don't usually have jobs growth. You don't usually have a low unemployment rate.
Right.
But there's really, I think that one of the questions I'm asking is there really some changes in the economy that we need to understand a little bit better, because this has gone on for quite a time, and yet it keeps going on.
Keeps going.
So what's happening? And one of the things that I have to ask is, well, is this a part of the change in the economy that's taken place over the last 50 years that has really altered the way we measure things, but also altered the way we understand things and the like?
Right.
And so I've tried to work backwards with that, because 3.5% unemployment is remarkable, and that's really good stuff. One of the things that I have worked with a little bit in my writing and in my consulting is the fact that we've had such a substantial shift in the makeup of the economy.
Tell me about that. What's really changed?
Two major things here. First of all, we've had a change in terms of the relationship between the manufacturing sector and the financial sector. And one of the things that happened in the last 50 years is that the government has created an environment which I call credit inflation, but which has led a lot of money going into assets. And we saw it early in the 70s where housing prices started to build up, gold prices started to build up, the value of art increased and so forth there. But this continued then through the latter part of the century. We got into the 1990s, and you had quite a few asset bubbles during that time and the like. The only thing I can see from the data is that we are having a lot of resources flow into what I call the financial sector, as opposed to the industrial sector. The reason being is that they see that these prices in assets and things are going up and up and up. One thing to look at is what's happened to the stock market since the Great Recession. The stock market has consistently hit highs, new highs. Last week, just barely below the most recent highs and so forth. And so what's going on here? I mean, I have traced the rise in the stock market with, for instance, the Fed's policy of quantitative easing, that they have constantly erred on the side of monetary ease. And all this money is going into the financial resources. Well, that builds up the finance industry. That means more people are working there and that kind of thing.
Okay.
But how do you measure that? Gross domestic product, we're
Is
talking about a product, exactly.
Yeah.
And you can measure that. You can measure the number of cars that are
Right.
produced. You can measure the number of houses that are built and things like that. But how do you really measure in terms of an economic impact
The services related
the
to that,
services
right, yeah.
connected to finance? Of course, the other one then is information technology. Information technology is what? It's all intellectual capital. It's not physical capital. So we've got these two major sectors that are absorbing lots and lots and lots of money. And that's where the jobs are being created. That's where resources are going and things like that. They're not going into cars anymore. They're not going into steel anymore and things like that. And just another thing that has come up that is so interesting, that kind of picks up kind of the disequilibrium that exists in the economy, is that if you look at the labor force participation rate, it's about the same now as it was in the latter part of the 60s. From the latter part of the 60s, it increased 5 or 6 percentage points,
Right.
from about 62 to 68 or 67%.
Okay.
But
I
then
wasn't
that's
there.
dropped back to 62 or 3.
Right.
What happened in there that might be consistent with what we've seen?
Right.
Well, one thing is what happened in the 1960s. Feminism became very, very strong. Women started going into the workforce in a greater numbers, and you had women also going and getting more education. What do you find now? Well, you've got the same labor force participation rate as before,
Right.
but you've got a huge now part of the participation being women. And you find that in the those that are not participating are men
Right.
with less education, and that has made a fantastic change, but shows how we've moved from, you might say,
Right.
less information and education to more information and education. So there's been this huge change in what we are producing.
Absolutely, and I see what you're saying, that then there are anomalies that may not be anomalies any longer. They may just be the new measurement.
That's the way it is.
For what this is. That's all very fascinating.
Exactly,
Yeah.
Kelly. And so, the economy may be better off than we think it is.
Right.
And also may not be as subject to cyclical fluctuations as it
Sure.
was in the past. Because, for instance, the technology companies, Microsoft, Apple, all these, they're generating so much cash, they don't have to go to the financial markets to make their innovation. They have the
Right.
cash internally. So you don't
So
get
new
the market
rules.
swings that you used to when people were putting the investment money into physical capital.
Right.
Now they're putting it into intellectual capital, and as a consequence, the path is a lot smoother.
Gotcha.
So we're 10 and a half years into our economic recovery.
Right.
Historical high. How long can this continue? People keep asking this over and over. I don't have the answer to that.
Right.
But the question is, we may not, see what we saw
Measure it the same
before
way, right.
because
Exactly,
things are not as
because things
volatile.
are different. And
Yeah.
it makes sense. We're going into a brand new decade as well. So
We're
it
going
all
into a brand
stands
new
to
decade.
reason, right? That,
Yes.
that things would change. So, well, endlessly fascinating, John. And this is what I mean when I say we could talk about a whole bunch
We
of
could
different
talk a whole-
topics. We do have a viewer question that
Yes.
came in, and this is from Martin Jones in Wayne, Pennsylvania. And he wants to know, what banks are a good investment for the long term and why?
Okay. I have received this question before, and my answer at that time was, I'm not investing in the banking industry right at this time.
Right.
We can go back and talk about the changes in information technology. The banking system is changing so dramatically. I mean, the banks, the number of commercial banks now is under 7,000, my guess
It's a much
is
smaller number than it used to be.
much smaller number, and the largest six banks in the United States have almost 2/3 of the assets in the banking system. My feeling over the next 5 to 7 years, we're going to see this trend accelerate, which means that more and more banks will be leaving the banking system, either through acquisition, generally through acquisition, and the banks will be getting, the surviving banks will be getting larger and larger.
Right.
The investment in the banking industry then is not based on value in terms of the classical way to measure investment. It's going to be on who's buying who. And to me, that is not something that has a systematic way to analyze it.
For an investment strategy.
And I tend to be a value investor, so that I pull out of markets and situations in which you don't have the ability to analyze it quantitatively and so forth as you would like to.
Makes a lot of sense. Makes a lot of sense.
Well,
I hope
you.
that was very helpful to Martin in Wayne, Pennsylvania. And now we would like to tell you how you can send in your questions.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Welcome back. Today our guest is Tara Nurin. And Tara is an accomplished broadcast news reporter, and today wears many hats. So many, I had to make the little list here. So you are a beer and spirits contributor to Forbes, drinks columnist for New Jersey Monthly, co-host of the weekly What's on Tap TV show, certified beer judge, and now you're writing a book about the history of women in beer. So I think it would be fair to say you have your finger on the pulse of the beer industry.
This is what they tell me, yes.
Awesome.
There's a lot to keep up with, but yes, I'm keeping track of all of it.
That's great. And aside from the obvious question, which would be, when do you sleep? I think my first question is, what drew you to this industry?
Well, I can say this now. I think the statute of limitations has passed, but I started drinking beer, to be honest with you, when I was probably around 2. My father liked his cans of Budweiser when we would go out on the boat, and I don't know what drew me to it, but I was curious, and he would always indulge me in sips.
Right.
So I've developed a taste for beer since I was very little, and then I went to college in New England in the 90s, and macro brews, as we called them then, were getting popular. And so I've just always sort of stayed on top of beer trends, and here I am making a living off it.
That's awesome.
Thanks.
And it gives you a chance to use your skills in your reporting skills, which makes me think automatically, give us some context for us. What's the history of the craft brewing industry, and put some numbers around it for us if you can. That would be great.
Yeah, sure. Well, craft brewing started post-Prohibition American craft brewing, as I like to distinguish it from craft brewing of the past, because when there were all local breweries, it was all craft brewing. They were all just families making beer for the most part. Started several decades after the end of Prohibition. Almost all breweries in the country closed during Prohibition, and then the few that reopened afterwards struggled a lot. We had a lot of consolidation, like you were talking about, in the banking industry, and by the time we got to the 60s and 70s, we had a lot of watered-down, cheap German-style lagers.
Okay.
Which are fine, but that was all there was. So home brewers and people who had tasted beer in Europe wanted something new, so they would return to the United States and slowly start to open these craft breweries, artisanal, small, independent breweries, generally making fuller flavored, fuller bodied English ales. By the 90s, don't want to say it was mainstream, but most people had at least heard that this was happening at the time. So we started to get private investment, there were IPOs, and then the bubble burst. There just wasn't enough demand at the time in the 90s for all this money that was going into it, all this money that was getting spent on equipment, et cetera. So fast forward to, I guess, the 2000s, and then this decade, people started taking a big interest in local, sustainable, artisanal, and people realized, hey, there are these breweries that still exist.
Right.
Why don't we take another look at those? And so now we're at about 8,000 breweries in the country, which is the most in history.
Wow, that's really interesting. Do you think that social media, or the lack thereof in the 90s, might have played a factor in why they didn't really take off it initially? Because I just think of social media, when you know it and you've got something good, you're sharing it, and it just spreads so quickly that way. So maybe that was a boost.
That is certainly true. And in my book, I'm going to talk about how before the internet, people were able or not able.
Right.
They would handwrite newsletters and mail them out with actual stamps, to get word out. But yeah, social media has had a lot to do with people. There's even an app, more than one, but an app that everybody tends to use called, of course, now I'm blanking on it because I don't happen to use it.
That's all right.
Always happens.
But the
you can log your
technology
beers.
is there.
Yes,
Absolutely.
And share
make
all
it
of
more
those.
like a community around that. That's really
and rate
interesting.
them too, and that helps also.
That's interesting. So you said that there's some consolidation in the industry. So how is that affecting the individual breweries? How are they surviving, thriving? I'm sure that's the continuum, right?
It is a continuum, and we've seen a lot of really unexpected things happen to craft beer in the past few years.
Right.
So the consolidation that we were seeing back mid-20th century, very different from the consolidation today. So the trajectory that we're mentioning, back around, I'd say locally, well, I live in New Jersey, and so let's just take New Jersey as an example, because I'd say that's fairly middle of the road. About half the states are more advanced than New Jersey on craft beer, about half are behind. We really started to take off with craft beer in 2011. That was just a really pivotal year for a lot of breweries opening in New Jersey. And then again, the laws changed, and then after 2013, it exploded anew. So that's fairly typical of what happens around the country. So things went super well for a couple years. We were talking 18% growth year after year nationally.
Nice strong double digits.
And that was around 2013, 2014, and then boom, things just started plummeting. And craft beer sales and volume is still in the black, but we're looking at 4% growth per year now. So this is a long way to get to your question. Sorry for providing so much background.
It's helpful.
Okay, good. We're seeing a lot of consolidation again, as you mentioned. But the reason I say it looks so different, now we're talking about mergers and acquisitions within craft beer.
Oh, okay.
Now, in the 60s and 70s, there was no such thing for the most part as a craft brewery. But now, and I'm going to pick up my notes for this if you don't mind, because I wrote down 4 different types of M&As that we've seen in the past 6 months or less that I think a few years ago we might not have even predicted the existence of. And some of these came as a huge shock to people like me who analyze the industry. Maybe I shouldn't admit that, but nobody predicted that.
I mean, I think it sounds like it's going to be similar to what John was saying. Like, there are just things occurring that didn't occur before. Right. Yeah. So they're just new. It's not.
Well, exactly. In this industry,
you don't have a framework to.
That's exactly right. 50 years ago, this didn't exist, and then as the industry has professionalized, grown, and changed, things happen that have never happened before. So really recently, everyone was shocked by this news. It's sort of a man bites dog story, where you have this brewery called Ballast Point that's in San Diego. A couple years ago, it was bought for $1 billion with a B by Constellation, which is a mega corporation that owns a lot of beer and liquor brands. As soon as they bought Ballast Point, they went up for about 2 quarters really well, and then boom, they started falling drastically. News comes out that this tiny craft brewery in Chicago, no one's ever heard of, just bought Ballast Point from Constellation.
Okay.
For the numbers aren't out, but you can imagine pennies on the dollar.
Right. And the significance, though, being the smaller brewery.
The smaller brewery buying the bigger brewery. So that's one way that it's happening. You're seeing, this still comes as a surprise to us sort of observers, that you've got craft breweries merging that you wouldn't have expected before. Boston Beer, which makes Sam Adams and Truly Seltzer, bought Dogfish Head, which is out of Delaware and one of the most popular, bigger craft breweries in the country. Everyone was shocked by that. We're hoping there's a lot of synergy there.
Right.
I have faith. These are two really smart business people running these companies. Then you've got macro brewers buying a consortium. Anheuser-Busch InBev, obviously over the past few years, has bought a lot of craft breweries. Now they've just completed a purchase of a company called Craft Brew Alliance, which itself owns 9 breweries.
Okay.
So they took that over. And then what we're starting to see more of, and I predict much more of this, is big international breweries buying craft breweries. New Belgium Brewing out of Colorado has been a darling of the craft industry since it started in the 90s. And Kirin out of Japan just bought it, let's say 2 or 3 months ago. And so that's what that landscape's looking like.
Very interesting. It's like being on the ground floor every day for you because it's changing.
It's true. And when you wake up and see that a brewery you've never heard of has bought one of the biggest and you couldn't even track it,
that's
like
amazing.
I said, it's hard to keep up with.
Could I just jump in with the point here? Yes. I mean, nowhere in the description that you've given is there anything about the consumption of beer. See, this is all about assets. And again, interesting, the timing that you put it. This came after the Great Recession, early on after the Great Recession took place. Lots of money flooding into the financial markets. It took off.
Right.
People had money to put into these assets, so it took off. Then after taking off for a couple of years, people began buying the assets in between. No mention about consumption. It's all about assets that you've been talking about. Just thought I'd throw that out.
I love it when we tie these things together like this.
And you saying that makes me think about the consumer and where some of the pushback has come in. Craft beer prices have been rising and rising and rising, whereas the bigger companies are able to either lower their prices or keep them flat. And so when you're spending $17 on a 4-pack of beer and you want to do that once a week, once a month, 3 times a week, it gets very expensive, and then people start evaluating, well, how much more value am I getting out of this, Dogfish Head versus, a non-craft brewery. And one of the other big problems that beer is facing is competition from wine and spirits, particularly spirits. You can see the shares going 1-to-1 from beer to spirits.
And there's so many options there now too.
Yes.
There's so many new types of products from what I see on the advertising. It's just everything is flavored with something, and it's getting, I think, harder to tell what's fully one product or the other. I was just reading something recently about like bacon infused whiskey. I was like, okay, that's, again, it's nice to be on the ground floor. I've never heard about these things before.
And a lot of that is about shelf space. If I'm a whiskey maker and I can have 17 products because one's got bacon in it, one has chocolate in it, or I can have 4 products, why not have 17?
Sure.
Yeah.
And you looked like you were about to say something.
Well, it just, it sounds to me like we've got 2 perfect examples. for case studies. That we could write these up, and I mean that they're really interesting problems or interesting developments, and they really tell a lot about how markets work and how people respond within those markets. Very interesting.
It's so fascinating because you also look at some of the other pressures on beer, namely people are drinking less. And here we can play blame the millennials again. Right. You know, younger millennials in particular have really cut back on drinking. Yeah. There are many reasons for that. You've got competition, potential competition. It depends on the study as to whether it's really hurting beer or not. But legalized cannabis and CBD drinks. Right. And then spiked seltzer is the story of the year. That's gone crazy. And while it's sometimes, depending on who's counting, spiked seltzer can boost beer's numbers because sometimes they get included in the beer category.
They're in the party.
They're at the party, exactly. But then when you look at beer specifically versus seltzer, you see that seltzer is drawing beer drinkers away. So the breweries that are also producing seltzer, and that's growing by the day, those I think can be the real winners because they can capture both drinkers for both.
So I think we have 1 quick minute left, and I wanted to ask you about diversity. You know, it just comes up in the work that I do, but tell me about it. Is there diversity in the beer industry? What does that look like? And you know what? You probably even have more than 1 minute. So.
Well, you can go like that when I'm out of time. This is the great hand-wringing debate in beer. You know, sales are the real great hand-wringing debate.
That aside,
that aside, then we talk about diversity. Women are making good strides in beer, both on the consumer and the production side. You know, your regular weekly craft beer drinker is still male, 21 to 44, pretty high income, between $75 and $99,000.
Right.
Sorry.
That's okay.
Of income per year.
Sure.
But when you start to look at monthly craft beer drinkers, it's about a third of those are women. There are also about a third of beer industry workers who are women, though very few who are actually brewing. You know, you've got HR, ownership, sales, whatever else.
Right.
You know, the more acute problem, I think, is when we start to look at Hispanics, African Americans, and there really isn't much being done yet to bring people of color into the fold, both as consumers and as people in the industry.
Side, right.
There are efforts as far as consumption goes. Non-Hispanic whites make up about 14% of craft drinkers, but that number hasn't moved very much in the past few years. So it's something that the industry is really trying to figure out. You know, how do we break out of this bearded, tattooed, flannel lumberjack brewer guy stereotype? And there are some strides being made.
It's an opportunity,
for sure.
Right? And I think if people look at it that way, they're going to figure that out very quickly.
Especially when we're looking for new drinkers to sort of reverse the decline. So
some more exciting things on the horizon.
Very much.
That's awesome. Thank you very much, Tara. It was very nice to have you on the show. I learned a lot. I learned a lot from you, as I always do. Mr. Mason, thank you very much. And I just wanted to let everyone know that when you tune in for the next episode of Money Matters TV, our guest will be Gerald McCoy, and he's the president and CEO of Eros Medical. So I want to thank everyone for joining us today, and as I often tell you, be well and expect great outcomes from everything you do.